Hello, guys. I'm here with Julie Bratton, who is the Vice President of Old Republic Exchange. We're going to be talking about all things 1031. This is such an exciting interview, you guys, because a lot of you are wanting to understand 1031 exchanges. Julie is amazing. I cannot think of anybody on the entire island chain that is better than Julie. You're amazing, and I'm very grateful that you're here, Julie, talking
Thank
all
you.
1031 exchanges.
Thank you so much for having me.
So, Julie, can you explain to the public what is a 1031 exchange?
Okay, a 1031 exchange is a way to defer paying capital gains tax, and it's just for the sale and the purchase of investment properties or properties that are held for productive use in a business or trade. So they must be investment for investment, no personal residences.
Yeah, right. There's a lot of people that are wanting to utilize that as a personal residence.
Correct.
Now, can you briefly walk us through how can a person do a 1031 exchange?
Once they list and get an accepted offer on the property they're selling, that is usually when the exchange company needs to be notified. So you'll negotiate your sales contract, you'll have 1031 language in your contract, and then you'll open up escrow.
Right.
And once you open up escrow, I need to be called. And I get a copy of contracts, the title report, entity documents if you own the property you're selling in an entity. And I use all of those items to complete and draft the 1031 exchange documents.
Right.
It's also good before you sell any property to be talking to a tax professional to make sure it's in your best interest to do it.
Exactly. Let's talk about the timeline, Julie, so that
Okay.
people can have a better understanding.
Okay. So, one thing I also want to bring up is an exchange needs to be set up before you close on the sale of the relinquished property. You cannot close and then a couple days later call up and say, can I do an exchange? You have to set it up before escrow closes. But the day it closes is when that clock starts to tick.
Right.
You have 45 days from that date to identify in writing what you're going to buy or what you think you're going to buy, and 180 days to close on it. So the 45 days is included in the 180. You don't get 45 and then an additional 180. And
Right.
every day counts. So if 45 days lands on an Easter Sunday, you still need to identify by midnight of Easter Sunday. If 180 days lands on Christmas, you might have to close on day 179 or 178. The
Right.
IRS is very particular about these dates.
And now, Julie, you touch a really good point at the very beginning of our conversation. People need to communicate with you that they want to do a 1031 exchange, right, prior to closing.
Yes.
How long would it take you and your team to set up a client in the system?
I mean, I'll throw this out there. I can do documents in 20 minutes if I have to, as long as I have everything that I need. It would be nice to have a couple of weeks notice for sure. But the sooner I talk to the client, it's actually much better. Number one, we establish a relationship. Number two, I understand what they're doing, what they're trying to do, and I can uncover any potential red flags or hazards or pitfalls or gray area that they might be, dipping their big toe into. But technically, I can do documents fairly quickly as long as I have what I need to get started,
Right.
which is contracts, title reports, and entity documents.
Right. And you're a rock star in many ways, girl. So
Oh,
you get it done
you're so
all the
sweet.
time.
You're so sweet.
What properties qualify for an exchange?
Any type of real property. So there's a term that's out there called like kind. And like kind is a very misunderstood term. People take it very literal. That's condo for condo or single family for single family. And although all of those are just fine and they qualify, it's really any combination of real property. So let's say condominiums, single family home, multifamily, industrial building, commercial building. So you can't go out and buy a boat. One thing I like to point out, or two things actually, with like kind is
Hmm.
leasehold property. We have pockets of leasehold in Hawaii. Leasehold property has to have 30 years or more remaining on the lease to qualify.
Mm.
And vacant land is another thing I like to point out. It qualifies for an exchange. You can't rent it out, but it appreciates. But when you go from depreciable property, like a condo or a single family home or a commercial building, and you want to buy vacant land,
Mm.
there'll be depreciation recapture to pay, and that's taxed at 25%. But as long as it's real property, you're good. No boats. Can't go out and buy a boat. That's
No,
wild
no
fun.
boats exchanged. Now, Julie, can you walk us through the pros and cons of exchanging for people that are very, very new to this concept?
Well, the pros, there's a lot of pros. The pros, the first main reason why people do an exchange is to defer paying the capital gains tax. I mean, capital gains can be fairly substantial and add up quickly. You have the federal, which is 15 or 20%, depending on your tax bracket. You have the state tax. You have depreciation recapture. You have the 3.8 affordable care tax. So that adds up pretty quick. So that's the number one reason. You can also transfer into a better income producing property. Let's say you own an investment property that's just okay, you could do better.
Right,
Sell that property, defer paying the capital gains tax, and get into a better income producing. Hey, you could sell one and buy three. You can sell three and buy one. I mean, there's just so many variations that you can do. Here's one that I love. Why not sell vacant? If you have clients that own vacant land or you own vacant land doesn't pay usually. Sell that vacant land, do an exchange, get into some income producing property so you can pay for your aging parents' health care or your kids' tuition at school.
right.
I mean, these are great ways. And you can diversify and leverage your real estate portfolio. You can do an exchange anywhere in the United States, the U.S. Virgin Islands, except for Puerto Rico, and Guam.
Wow.
So those are all the great ways. I guess the only con really would be is when you exchange, you're deferring the tax. Exchange, 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 really until you end up passing away and your kids inherit these properties is probably the best way to go. But if for some reason you had to sell down the line,
Hmm.
that's when taxes are due.
Right,
So, and the basis of the first property you do an exchange with will follow you around. So let's say you do 5 exchanges. And on the fifth property, you're like, I don't want to be a landlord anymore. I'm just going to take the money and retire and go to Tahiti. Okay, fine. But the basis of that first property you did an exchange with follows you around. So you'll have quite the tax bill. So you would like to use it as obviously a tax savings
strategy.
scenario in a strategy, thank you, or estate planning. But if you're looking to just become liquid one day, you're going to pay the piper. So,
Right,
it's
right. We
it's
all
hard to
get
have.
those bills, Julie.
Yeah, it's very hard to have clear crystal ball action, but if you can have some, it's helpful in your estate planning. And that's
Right,
why you talk to us and your CPA to get guidance.
right. How is the exchange value of the property determined by
Oh,
your
that's great.
company?
So, well, by every company. When you do an exchange, you need to reinvest both your basis and your gain. So, what that means is if you are selling a property for $1 million, you need to buy a property or properties because you can buy more than one that are equal to or greater than $1 million.
Hmm.
You can subtract commissions and escrow fees, and that could be your magic number to purchase. But when I go out in the field, I usually am saying it's equal to or greater than the sales price
Mm.
minus the commissions and escrow fees. Now, if you want to buy lower, you can. It would be a partial exchange, but the difference would be exposed to taxes at that point.
Mm.
So let's say you were selling for $1 million and you only wanted to buy it for 800. You could take $1 million,
Right,
subtract commissions and escrow fees, and that's your magic number. And if you only want to buy for 8, the difference between that number and 800 would be taxable. So
right,
it's okay to buy lower as long as it's not too far down where it's a wash and you're going to pay the same amount of taxes anyway.
right, right. And that's something that you assist the clients with, right? With determining
Right.
or assessing them. Yeah,
Well, I will look at those numbers, but I'm still going to send them back to their tax advisor to just make sure. Because, there's no way you or I would ever know what their tax situation is in its
that's true.
entirety. So they may
Yes.
have something else in their portfolio to offset the gain that maybe they don't need to do an exchange. I would never know that.
Right, 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 right.
So I look at their numbers and I say, this looks great from an exchange perspective or not. Or I
Right.
send them back to their accountant.
And Julie, you just touched a great point here because people are looking at us as resource, right? And we provide all the resources, but we highly recommend that in strategy, right? When you're trying to strategize something, your CPA. gets in the
Right.
game with.
Everybody has their lane. Like
Right.
you sell real estate. You can't be a qualified intermediary, and you can't be a CPA. And I'm a qualified intermediary. I'm not a realtor. I can't sell property, and I'm not a CPA. A CPA can't be a qualified intermediary, and they can't sell real estate. So everybody has their role. But
That is
you and
true.
I clearly our E&O insurance would be on the line. Our status as a qualified intermediary would be on the line. It's really important that our clients get sound tax advice. And I'm
Advice.
happy to the CPA also. I mean, they do taxes every day. And they don't do
Right.
exchanges every day. So if they need some assistance with some information that I have, I'm happy to give it to them.
Right.
Uh, but clients do need to be aware of what lane, who they're talking to at what time, I guess is how you say it.
Julie, what are the fees associated with the exchange?
Well, it depends on the sales price of the relinquished property, but our fee is broken up. So right now, if you the lowest price, $950 when you sell your relinquished property, and then it's $575 for each replacement property that you purchase. So you pay as you go. For example, if you don't find anything, obviously we're not going to charge you $575.
Right.
But it really depends a little bit on the makings of the properties in question. There's reverse exchanges; those are a little bit more expensive,
Right.
but that's the general. 950 and 575 is where we start.
That's beautiful. Oh, thank you so much,
That's
Julie.
nothing compared to what you're going to pay in taxes.
No, that is nothing. And then you get not only Julie, but you get Julie and her team. It's Julie and
Absolutely,
her
they're
team.
the greatest team on the planet. I'm telling you, they're
Oh, I
amazing.
know. Yes, Julie, you're amazing. Now, what about how can people take title on the replacement property? This question has popped up.
That's a great question too. So exchanges are taxpayer driven. So forget we're even human for a second. We're just an ID number. Tax
Right.
ID number sells, same tax ID number has to buy the replacement property. So if I sell as an individual, I have to buy as an individual. There's two exceptions there. If I sell as an individual, I could buy in my own single member LLC that's disregarded for tax purposes that I'm the only member of, or my own revocable trust. But I could not buy a replacement property in an entity that you and I are part of, because that would be a
Mm,
different tax ID number.
right.
So you need to take title to the new property the same way you currently hold title to the relinquished property, the one being sold.
Right.
Great question.
I thank you so much for explaining. That has popped up. You have already touched on the definition of like kind property. Can you provide some examples to the audience that is watching?
I'll give you a story. I had a lady a few years ago call me up, and she was selling a $6.8 million commercial building in California. She
Wow.
calls me and she says, I'm closing in a week. I can only find another $2.2 million commercial building. So there's two things wrong with what she said. Well, not wrong, but she said she can only find a commercial building, which prompted me to think, does she know she can buy residential? And also, she was only buying for 2.2. And remember, you need to buy something equal to or greater than 6.8 or close to it if you want to have 100% deferral. So I asked her, do you have kids? She said, yes. How many? 5. And I said, okay, why don't you buy that commercial building and buy 5 condos or 5 single family homes? You rent them out. And then when you pass away, your kids will inherit it at a step up in basis. And she was shocked. She didn't know she could buy more than one, and she didn't know she could combine commercial and residential.
Wow.
So I think it's a good story because she ended up doing it. And actually, she did some estate planning at the same time. She was getting rid of her commercial asset and she did some estate planning by way of exchange. So when she does pass, her kids will inherit it. At least that's the way it is right now. Who knows what, the laws can change. But right now, when you inherit property, you get it at a step up. So she was
Right.
very happy.
You
And then
saved
she
the
was
day
buying.
for her.
I know. Her kids should thank me. Um, Now she's buying much closer to 6.8, and it made much more sense for her to do an exchange because without it, she would have only been buying a 2.2, and it wouldn't have been worth it for her to exchange.
That is incredible. And that's what it pays to have a strong partner on the other side. Because there's many people that just process, right? But you're also on the creative thinking, you're getting a sense of the client, you're getting a sense of their needs, and that's where you come in and kind of better guide them, right?
I think that's what I love about my job, actually. It figure it out. It's cool to see the light bulb go off, whether it's over the phone or on a Zoom call or in a
Right,
class. Oh yeah, I didn't think about that. That's kind of
right, 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 right. Well, now, Julie, can you refi the replacement property before you exchange?
okay. Refinancing. We're not doing a lot of refinancing right now,
Yeah,
but
no, we're
you can.
not.
The IRS says you can refinance right before or right after an exchange, but you have to have a specific economic reason to have done so.
Mm,
Lower interest rates is one of the examples, so I kind of feel like the playing field is wide open. But I always tell a client, you got to talk to the CPA. Run your specific economic reason by them. And if they think it's okay, my only other 2 cents is make sure that this specific economic reason is completely independent of the real estate transactions. Meaning, don't be applying for the refi and you haven't even sold your relinquished property yet, or it's on the market. Don't be applying for your refi and you haven't even closed on your replacement property yet.
right,
Specific economic reasons independent of these real estate transactions, and hopefully you'll be fine. So the answer is yes, but you have to be mindful of when and how you're doing it.
right. And you brought up a great point. Right now, it is not an exciting time to refi, especially if you
I know, but
scored.
it'll come. It'll
It'll
come.
come, exactly. And we've seen waves. How
Yeah.
long can someone rent a property that has been used as a future residence?
Okay, there's no rule or law on how long you have to hold investment property for
Mm,
investment, period. It's all about your intent to hold for investment. It's not measured by days, weeks, months, or years. So when I'm talking to a client, I say, I just say at least a year because you can clearly show on 1 year's tax returns your intent. How?
right,
You reported 1 year of income to the IRS. But I'm just saying that. It makes sense to me. But really, the longer you hold, the better your story because there is no rule. Everybody can ask 10 people and get 10 different answers.
right.
So it's about intent. So
Mm,
if you say you're going to buy a piece of property and you're going to rent it out for 365 days and you're going to move into it on day 366, you just blew your intent because you said you were going to move into it.
right,
So people have to discuss these kinds of things with their CPAs. Again, time. I mean, I keep saying that, but there's a lot of black and white in exchanges, but there's almost more gray area that clients have to have these conversations and figure out what their risk tolerance is going
right,
forward.
right,
I
right, right,
mean,
right.
if you don't get audited, everything works. If you get audited, it's when things don't work, and you just have to be prepared for that.
And then you start blaming everybody around you. And it's
So
like,
everybody,
no.
everybody.
Right. So,
Mhm.
Julie, what about when you rent? Can you rent a property to a relative? Can that apply?
Yes. I don't think the IRS cares who the renter is, but the renter, especially if it's your kid or a family, fair market value in rent is ideal because if you get audited, you need to prove that you're holding it as a legitimate investment.
Right.
So obviously, rental income is the best proof. If there's zero rent or $1 a month, they might ask you, "Who's the renter?" Oh, it's my kid while he's going to college. Okay, the IRS could say, "You're using it for personal use." So again, I don't think they really necessarily care who the renter is, as long as it's a legitimate rental.
Right. As long as you can provide the
Prove it.
proof.
You can
Right.
prove it. Yeah.
Now, Julie, what about doing a 1031 exchange on a relative's property?
Okay, the IRS doesn't like related party transactions. There are rules. When I talk about related parties, I talk about immediate family, pretty much lineal mother, father, brother, sister, parents, grandparents.
Right.
So aunties, uncles, in laws, exes, don't, steps are not considered related under the related party rules. So when I open up an exchange with somebody, I always say, if you're thinking of selling to or buying from a related party, we need to talk.
Right.
If I'm going to sell my property to my sister, she has to buy it for fair market value. She has to hold it for 2 years. I have to hold mine for 2 years because I'm doing an exchange. If I buy a property from my mom, I have to buy it from her for fair market value. I have to hold on to it for 2 years. And the IRS actually wants to see my mom go on and do an exchange. So usually the related party seller does not want to do that. But the IRS does want my mom to go on and do an exchange and hold her new property for 2 years. And if that doesn't happen, does it blow my exchange? If I don't get audited, it probably works. If I get audited, it might not. I better have a really good reason why she didn't go and do an exchange. Maybe
Right.
I'm buying her personal residence, and personal residences don't qualify. But it's I can't tell people it is a bulletproof transaction. So it's not illegal to sell to or buy from a related party in an exchange,
Hmm.
but you really have to know what those parameters are.
Right. If there's any things that people need to be aware of, is what will you recommend to a client before calling you, Julie? Things having a game plan in mind as to what their intent is with that property prior to calling you, or you do a brainstorming session with them as to
I'll do a brainstorming. I'll do a brainstorming session with them. If they're selling an investment property and they're not sure what to do and had no idea they were going to pay these taxes or
right,
there was going to be heart involved or anything like that, I'm happy to go over all of that with them.
right. Julie, how can
And
people?
many times I will prepare some questions for them. Like sometimes people will ask me questions and I can't answer them yet because I need a little information back. I'll say, well, before I answer these, can you tell me? Da, 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 and then they will, and then I can, yes. So
Right,
it's good banter back and forth.
right. Well, Julie, how can people get in touch with you, and how can they get your services?
Okay, well, you obviously call anytime, 808 524 6737,
Hmm.
or toll free is 877 591 1031. Sassy, isn't it? And then my email address is my first initial and my last name. So J for Julie, and then Bratton, Bratton, at Old Republic Exchange, all spelled out.com.
Beautiful, Julie. Well,
Call, email anytime with your questions. I'll always respond. That I'm hoping in a helpful way, and we can just banter back and forth, or pick up the phone, or do a conference call. I'm happy to do any of that.
Well, Julie, I wanted to thank you so much for taking the time to do this interview. I wanted to thank you so much for your knowledge. And I hope that if you are in need of a 1031 exchange, Julie is your girl. She is
Oh,
incredible,
yeah.
very knowledgeable, go getter
With you too.
lady.
I
And
love
we
working
very
with
much
you.
appreciate you.
Thank you.
Okay, guys, aloha.